Welcome back, and joining us on the show now is Peter McGuire. He's CEO, XM Australia. Peter, hi, thank you so much for joining us. I want to talk about the crude oil prices, where we've started 2024 slightly on a positive note. We are up by nearly 2% when you look at this week itself. And much of that perhaps is because of what's happening in Middle East and, of course, the Syria oil field shuts, etc. How do you look at these supply concerns, and do you see the premium sustaining in prices because of it?
Well, Manisha, good afternoon. There's so many different parts, and then you've got the US inventory at a three-decade high. So, yeah, it's up 2%. It's been a nice little rally, but it's been very whipsawing. And when I look at traders over this week, as far as positioning, they've been long, they've been short, they've sat on the sidelines. So I think there's probably a more bullish tilt at the moment, but there just seems to be, not a lot of horsepower behind it. I take on board what you mentioned. You've also got, the geopolitical concerns. ISIS claims responsibility for deadly bomb blasts in Iran, all of those sort of things wrapping up, and Houthi rebels. So, yeah, we'll just have to see where it runs over the next couple of days.
Absolutely. I understand, Peter, that the theme last year was all about demand, and we didn't see that coming in really from Europe or from US. And as you mentioned, with the US inventories as well, much on the higher side, does tell you that the demand isn't exactly growing there. Do you think that is going to be the theme this year as well?
Well, it could well be. I mean, you've had reasonably strong demand for a lot of things out of China, but when you're looking at the whole picture globally, yeah, fuel prices have had an impact as far as inflation and all of those concerns. So possibly you're going to see a softer demand picture over the first quarter. Also, you're in the middle of winter in the northern hemisphere, so we just got to see how that materializes. Probably latter part of January and into February, and so where we are as far as mid-year, I wouldn't be surprised probably that'll start to kick again as far as demand picture. You're probably, driving season, just the overall demand globally. So we hopefully, as they lower rates, that could be a little bit of the horsepower that we need, Manisha, as far as demand.
Peter, how would you look at the crude oil prices for this quarter now? I mean, we have some geopolitical tensions, but there are enough supplies, and then the markets are waiting for the US non-farm payroll data that comes in today. Whether or not the first interest rate cut would happen within this quarter, there are so many ifs and buts. But with all of that, how are you looking at putting out a range?
I'm looking at 166,000 for tonight, back from 199 in November. That for non-farm payroll. So I think that's probably showing as far as a demand side. Where we look at price, you'd have to be possibly around that $80, 75 to 80, unless you see something dramatic run from a geopolitical concern. And if it really starts to heat up with the Houthis, then that can really change the temperament across the oil complex very, very quickly, Manisha. And I think, we all just sit here and just see what the news items are and how that impacts price naturally.
How are you also looking at the natural gas prices? I mean, one of the major underperformers when you look at the energy space, and we haven't done much in the first week of 2024. What's your sense on that?
Well, yeah, exactly right. That's been very, very soft. And I'm just, I take on board the gas market. When you're looking at the big picture, we've also got to be concerned as far as weather outages, where you've got really, big changes as far as weather patterns, and then you've got more demand picture or more draw for heating oils and so on. So, and the heating of homes. So, at the moment, things are relatively okay. But again, that can change with, Mother Nature and how that impacts markets.